gold and silver hit a sharp wall after a strong run higher, and traders are now asking whether this is a healthy pause or something bigger. Both metals turned lower with enough force to go beyond routine profit-taking. In trader shorthand, moves like this are sometimes called violent reversals. That language points to a shift in who holds positions and how much risk they are willing to carry, not necessarily a change in the bigger picture for precious metals. So what drives a pullback this sudden? A few things tend to work together. A stronger US dollar puts pressure on gold and silver because both metals are priced in dollars. When the dollar rises, buyers in other currencies pay more and demand can soften fast. At the same time, any shift in expectations around Federal Reserve policy can trigger rapid repositioning. A stronger than expected economic data print, for example, can push traders who are leaning bullish to cut their exposure quickly. Silver tends to feel these moves more than gold does. Because silver has a larger industrial demand component, it tends to amplify price swings in both directions. When risk appetite drops, silver can fall faster than gold. It can also snap back more sharply when sentiment turns. The gold to silver ratio, which traders use to measure the relative value between the two metals, is worth tracking closely right now to see which metal is absorbing more pressure. For gold specifically, the technical picture comes into focus after a reversal this size. Traders are looking at key support levels, moving averages, and areas where price previously consolidated. The question they are trying to answer: is this a reset inside a broader uptrend or the start of a more meaningful correction? History gives some reassurance here. Gold has consistently attracted buyers during pullbacks when the macro backdrop stays supportive. And right now, inflation concerns, geopolitical risk, and central bank demand have not gone away. Central banks have been steady buyers of gold in recent years, and that kind of institutional demand does not evaporate over a single day's price move. Retail and institutional buyers also tend to step in when prices dip, which can limit how deep a correction runs. That said, crowded positioning in a rising market can push a sell-off further than fundamentals alone would suggest. When too many traders are on the same side of a trade, any reason to exit can snowball. The next major data points, especially anything that touches Fed policy or dollar direction, will likely decide whether this pullback finds a floor soon or has further to run. Keep those dates on your radar. Bullion Flash is brought to you by Absolute Bullion, a California-based dealer in gold, silver, platinum, and palladium. More at absolutebullion.com.